focus, but let's focus on the oil and gas space. Prabhudas Lillader, in their latest note, sounds cautious on oil marketing. The brokerage firm says that OMCs are playing the impact on refining volumes due to additional updates with respect to the Russia. To discuss more on the same, Swarnendu Bhushan, the co-head of research of Prabhudas Lillader, is with us. Swarnendu, hi, good morning. Can you on oil marketing companies elaborate a little bit on that? And there's also been a big surge in the stock price, right? Is that what makes you uncomfortable as well?
Hi, good morning. So basically, refining is not a structural play to be in. So what we are saying is that although refining happens to be a sunset industry, there's a lot of refining capacity addition happening globally, be it India. So for example, India is adding almost 1 billion barrel per day of refining capacity as we speak. Similarly, China, although they are the largest refining capacity in the world, but they are also adding 1.3, 1.5 million barrel per day of refining capacity. And so is Middle East almost adding 0.9 million barrel per day of refining capacity. On the demand side, if you see, most think tanks believe that maybe 2025 or 2026, you would start seeing decline in demand of petrol and diesel globally. And petrol and diesel form like 70% of the refining slate of a refinery. So from that perspective, what we are trying to say in our report is that you would structurally see weakness in refining margins over a longer period. In the short term, of course, refining margins have stayed strong, primarily because of the geopolitical issues that we are seeing. So in our report, what we have highlighted is that if you look at Russia-Ukraine border, you would see that they house almost 0.3, 0.4 million barrel per day of refining capacity. And since in last few weeks, we have seen that we have had drone attacks over there, which has disrupted basically supply of petrol and diesel exports from Russia. As a result of which, we have seen that benchmark refining margins have stayed very strong. And that is what has been reflected in the stock prices of the oil marketing companies. But these are not likely to sustain for a long time to come. And that is the reason why we expect that you could see 20 to 25% downside from here in all the OMC stocks.
Oh, interesting. Good morning, Swarnendu. Thanks so much for joining in. We've taken note of your rationale on that as well. A couple of questions. What is the current GRM? What is the number that you're working with from here on? Because a lot of refining capacity is going to be coming up globally as well. So throw some color on that.
So currently in the short term, we are working with somewhere around $7 to $9 per barrel of refining margin. But if you ask us about FY26, for example, then we are still working with benchmark refining margin of $6 per barrel. So if you look at 20 or 15 years average, Singapore GRM would be averaging at close to $5 per barrel only.
Okay. All right, $5 per barrel, got it. So can you just help us with what are your top avoids right now? What are your top picks with a, say, 12 to 18-month time horizon?
So top avoids will be HPCL for sure. So they are still working on their Vizag expansion, which we believe that stabilization is going to take much longer than anticipated. As a result of which, although in the short term, what we are seeing is that refining margins are strong. But if you look at past couple of quarters, their refining margin has been the weakest in the pack. So they have been lagging behind the peers. And this trend we expect to sustain till the time their bottom upgradation project is fully commissioned, which we believe will take at least a year more to come. In terms of buys, I would say that while India is still the production growth is yet to come in that company. So currently they are producing 3.3 million ton of oil and 3.3 BCM of gas. And they are likely to ramp up that to 4 million ton of oil and roughly 5 BCM of gas. When we see more clarity on that, I think that is one stock that investors could latch on to. And another is GSPL, where we see that on the standalone part also, you would see that volumes are going to increase. So currently they are at 29 MMSCMD of transmission volume. And we expect that they would soon ramp up to 35 MMSCMD of volume. And these are the two topics that we have in the sector.
Okay. Swarnendu, what about the price cut that came in from Gujarat Gas? Do you think it will help volumes? That's supposed to be the rationale. but demand is still yet to pick up to optimal levels. So your view on it?
Yeah, you have put it rightly that although they have cut their prices, but Morbi itself is to fire up, right? And exports primarily have been impacted because of the situation that we are seeing in Red Sea. Apart from there, that domestic demand has also not picked up well. So while volumes may rise, but the Gujarat Gas might have to sacrifice some of their margins on those incremental volumes. So that's why it won't be very EPS accretive, for example, for Gujarat Gas.
Swarnendu, do you track by any chance the renewable space, the wind sector, etc.?
Not so far. So far, we don't track.
All right, okay. We'll leave it there, Swarnendu. Appreciate you joining in, and it's a pleasure having you with us here on
Thank you.
CNBC TV 18. Thank you.